You not being able to buy a home has nothing to do with your credit score, the money you have in the bank, or even your ability to qualify for a loan. It has everything to do with you believing the myths and the lies that are being told about what it takes to buy a home. And in this video, I'm going to debunk a handful of these myths that I know have either stopped you from buying a home or may prevent you in the future. And who am I and why should you listen to me? 23 years of doing this, over 10,000 people that I've helped buy a home, 23 doors on my rental properties. I've built an incredible portfolio for rental properties, investment in real estate. I've been through it, I've seen it, and I've done it. And that's why I'm here to share with you exactly why you might be ready even though you think you're not. Here's a crazy stat. 60% of renters think they need a minimum of 20% down to even buy a home. And nearly half of them don't even know what credit score is required to qualify. So those stats give you a bigger picture that people are getting their real estate advice from the wrong places. And I know it's ironic, but everyone's taking their information from TikTok and Instagram. And don't get me wrong, I've got plenty of videos out there. But the reality is that you have a lot of people who are very good at social media platforms, but they're not great at lending. And they're sharing advice that may not be correct. They're sharing something that may look good on video, but doesn't actually apply when you fast forward, come to a place where you want to look to buy a home. There's even some experts out there, well-respected experts who put their opinions out there that are coming from, well, a different time. Yeah. Maybe when Dave Ramsey talks, it wasn't a good time to buy a home. Maybe everyone should have used a 15-year fixed. But guess what? That was back in 1998. Things change. And as things change, you've got to make sure that you're updating your sources, working with professionals who understand what's going on. And people are actually going through this and helping people finance and buy homes now. So you're not left feeling overwhelmed, misinformed, and thinking that you're never going to be able to buy a house. So let's just start by debunking the first myth that needs to go away. I've been doing this for 23 years, and even in 23 years, this has never been true. And that myth is that you need 20% down to buy a home. I've got to tell you, in 23 years, over 10,000 people that I've worked with, I have seen so many people use different loan programs that have allowed anywhere from no money down up to much larger down payments. And the reality is that 20% down is a good option if that's what makes the numbers work for you. But when you're in a position where you're a first-time home buyer and you're just starting out, you're trying to save, especially with other life events, right? Maybe you're getting married, other things that are expensive. Trying to save up 20% down just may not be realistic. Meanwhile, while you're waiting for those savings, property prices keep going up. You're in a position where those costs keep going up. So allowing yourself the opportunity to buy sooner than later financially could make sense. So let's say based off of the average appreciation nationwide, if you're saving and based off the savings rates that are going on, you're in a position you could be saving 3 to 5 years just to get that 20% if you're lucky. Meanwhile, the appreciation on that property has gone up and outpaced the amount that you're saving. So you can't actually save out of this problem. And just to ease your concern, in 2024, the National Association of Realtors showed that the average first-time homebuyer put down only 6.9%. Now, I know what you're thinking. If I don't put 20% down, my monthly payment is going to be astronomical. I'm going to have PMI. It's going to be through the roof. I'm not wasting money. I hear this one all the time, and it's probably the next myth I want to talk about and one of the things that frustrates me the most. The reality is that PMI is a good thing. PMI is allowing you to use a lower down payment. Again, you're able to buy sooner. A lot of people don't realize that with strong credit, PMI is a lot cheaper than you think. $300,000 loan amount, you may only be paying $30, $40 a month on that PMI. Well, let's put that into context. If you put down 5% instead of 20%, and let's just say you have the 20%, you put down 5%, yeah, you're paying PMI $50 a month. Well, what are you doing with that other 15% investing wise? I can promise you there's a lot of great ways that you can make more off that money than what you're saving by not having PMI. The next myth, and I don't understand where this comes from, is that you have to have a perfect credit score in order to buy a home. But don't get me wrong, the higher the credit score, that does mean that you should be able to qualify for better terms. But at the same time, there are some great programs available that will allow you to purchase even when you have a lower credit score. You do want to be credit responsible. I'm not saying that you have terrible credit because you never pay things back, and maybe that's a position where you have some other choices you need to look at before you buy a home. But the reality is that if you have a credit score, it's not perfect, talk to a professional. Chances are you'll be surprised to find out that you have a lot more options than you think. All right, next up, and I feel very strongly about this one, which you're probably going to find odd given that I'm a mortgage lender, but I hear this all the time. time, renting is throwing away money. It's just not true. There are a lot of circumstances where renting is a much better option for someone than buying a home. First, the short term. I don't think that it's a good idea to invest in real estate just to try and make a quick buck. Now, don't get me wrong. There are investment strategies that you can use in different circumstances, but when you're talking about buying your home where you're going to live, you need to hope for the best and plan for the worst. Looking at this, if it's time to buy, you need to be ready to say, look, I love this. I want to live here. I can see myself living here 5-10 years. I can see my family living here. Think about the fact of what does that future look like for you? Well, if you're in a place where you don't even know what's going on, maybe you're moving to a new town or a new city and you don't even know which area you want to live in, well, that's not the perfect time to get out and just buy a home because you could change your mind, a year later? The reality is that renting is a luxury. If you're in a position where you can take the flexibility of being able to pick up and move when you need to, adjust your living situation on a more frequent basis, well, it's a lot easier to, let's say, throw away your money for the next 1 or 2 years than it is to try and get out from underneath the wrong property. That could put you up in a position that's going to be an ultimate disaster that could just completely destroy your financial future. And every time I get asked the same question, is this a good time to buy? I say the same thing. You find a place that you love, where you want to live, and you can see yourself there, again, 5-10 years in the future. That's great. Second, can you afford it? Make sure you're comfortable with the monthly payment. If you can answer yes to those 2 questions, it's always a good time to buy. The next myth is that you believe that the most important thing and the only thing that matters is the interest rate. You've got to keep in mind, this is coming from a cost perspective. There are a lot of lenders that will offer low interest rates, but then they're charging huge costs up front to get that interest rate. So you want to look at the overall cost. What's it costing you to get that interest rate? And if you want to reframe this and take control of the situation, keep in mind, you can control how much interest you pay as well. Maybe interest rates are higher and you're a place where that's the best rate you can qualify, but that's not what you want to pay. Remember, if you put additional money towards your loan balance and pay down that principal balance on your loan, you're going to recalculate how much you pay in interest every month. So you have the ability to control how much interest you'll pay. When you're going into this, keep in mind the total cost and then what's your ability to control that rate. Last week, I was talking to a client and they came to me and they said, I can't buy a home until I pay off my student loans. And this is something that I've heard in other circumstances. You can have debt when you buy a home. Matter of fact, having debt is what allows for a better credit score. Keep in mind, your credit score is your reflection on how you borrow money and pay it back. Just because you have student loans, credit cards, or other debt doesn't mean that you can't buy a home. As long as you're carrying a responsible debt load and the amount that you're paying on is within your means, then that's not going to get in your way of buying a home. When we go to qualify for a loan as a lender, we're looking at what's called the DTI, and this stands for the debt to income ratio. It's basically how much money you're making on a monthly basis versus how much you're spending on a monthly basis. And that will include your housing costs. So when you're looking at this, we want to look at the home you're looking to buy, right? Taxes, insurance, the principal on the loan. And then we're going to look at things like your student loans, your credit cards. As long as that number stays below 40%, 45%, then you can get a loan approval. Make sure that's what works for your budget, but don't fall into that trap of thinking, well, I've got these debts, I've got to pay them off or else I'll never be able to buy. The next one, well, this is for the self-employed, the freelancers, the people that are out there, the entrepreneurs. I mean, it's crazy how many people are building their businesses right now. One of the things that I run into will be consistently, people feel like, well, I'm self-employed, so I can't buy a home, or I'm self-employed, so I'm going to get worse loan terms. The reality is that when it comes to calculating your income, it's just a different math problem. I look at it like standard math back when you were learning addition and subtraction. Once you know how to do both, one's not harder than the other. And the reality is that the difference between being self-employed and being a standard W-2 employee doesn't have to be any different as long as the lender understands how to calculate your income. Now, with that being said, one of the benefits of being self-employed is that there are deductions. Lenders qualify self-employed individuals off of their adjusted gross income. That means how much money is left over after you write off those expenses. There are ways for us to look at alternative loan programs using bank statements or your assets. There are ways that we can calculate your income outside of traditional tax returns. So don't fall into the trap of thinking that just because you're self-employed, you can't buy a home. Think about it. There are a lot of very successful people who run businesses and they own homes. So this is not something that you need to shy away from. The last one, and we talk about this all the time, is that you need to wait for prices to fall before you buy a property. You can't time this. That's like trying to catch a falling knife. You don't know where real estate values are going, up or down. And the reality is that the prices on homes are driven by supply and demand. At the time of recording this video, the demand outpaces the supply by like 10x. It seems offset because higher interest rates will slow down that demand temporarily. But keep in mind, when interest rates drop, that demand picks up. I've watched this happen over the course of the last few years where as soon as rates start to drop, all of a sudden the market is flooded with buyers. They're there. They don't have a place to live. They're renting. They do still want to buy a home. The longer you wait, the bigger that pool grows. You're waiting to buy a home for prices to come down. Meanwhile, that's not happening anytime soon. At the same time, more and more people are becoming qualified home buyers. On the flip side of that, you're still paying rent, and you're in a position now where instead of investing and being one of those people who could have actually taken advantage of that increasing price point, instead, you're taking advantage of that increasing rent that you have to pay. Now that you know the truth and that you're a lot closer to being able to buy a home than you actually think, now let's talk about, well, the now what. First things first, talk to a loan officer, talk to a professional and find out, what does this look like financially for you? Get an understanding of your credit. What does your credit look like? Are you in a position where this is the right time for you? What does your budget look like? How much are you going to be comfortable paying? Just because you can doesn't mean you should. We want to find out, okay, if I have to pay for a mortgage, taxes, and insurance, the cost of ownership, what does that look like for you? Not just on a monthly basis, but then fast forward when it comes to owning that home. Have that real conversation with yourself. What are you going to be able to pay for? Next thing to consider then is what's going on in your local market. There are ups and downs depending on where you live. Just because across the country everyone says prices are up, prices are down, that doesn't mean that's what's happening next door. So become an expert. Do your research. Talk to professionals. Talk to lenders. Talk to real estate agents. Get in the know about what's really going on, because if you can find yourself in a position where you understand that pattern of the property prices, you understand what your options are from a financing perspective, and most importantly, you understand what that means for you, then that's going to put you in the best position to take that move. Listen, talk is cheap. Watching this is one thing, but the best way to experience this, watch this happen for real and check out my video as I posted a live pre-approval. You can hear the conversation, the details, and know exactly what to expect when you talk to a lender. This is going to help you better prepare and put you out there so you know exactly what to expect. Listen, thank you for watching my videos. You know, it's a lot of work goes into this. I love making videos, sharing this information, the ability to try and help people and to come out and just try to get rid of some of the noise that's out there. There's a lot of information. I really appreciate it. If you like the content, you like everything you're seeing, do me a favor, please click that like and subscribe button. Your support is going to make sure that more people like yourself have an opportunity to see this information.